The Dow Jones Industrial Average tumbled 400 points today. This sharp decline reflects escalating trade tensions between the United States and China. Investors, worried about a potential trade war, pulled back from the markets. Fear and uncertainty are palpable on Wall Street. The possibility of a full-blown trade war between the world's two largest economies is a major concern for investors. Such a conflict could have far-reaching consequences for global growth and stability. The market is clearly signaling its unease. The Dow's drop is a significant development, as it reflects a broader trend of market volatility in recent times. This volatility underscores the interconnectedness of the global economy and the sensitivity of markets to geopolitical events. The latest round of trade tension stems from disagreements over intellectual property rights and trade imbalances. The U.S. has accused China of unfair trade practices and intellectual property theft. In retaliation, the U.S. has threatened to impose tariffs on a wide range of Chinese goods. China has vowed to retaliate with tariffs of its own, targeting key U.S. exports. This tit-for-tat exchange of threats has heightened fears of a trade war. Both sides seem entrenched in their positions. The trade dispute is not new. It has been simmering for years, with periods of escalation and de-escalation. However, the current situation is particularly worrisome due to the aggressive stance taken by both countries. The uncertainty surrounding the trade dispute is a major concern for businesses and investors alike. Companies are hesitant to make long-term investment decisions, while investors are pulling back from the markets. The Dow Jones was not the only index to suffer losses. The Nasdaq Composite and the S&P 500 also experienced significant declines. The Nasdaq, heavily weighted towards technology stocks, fell by 3%. The S&P 500, a broader market index, declined by 2.5%. These declines across major market indices highlight the widespread impact of the trade war fears. Investors are selling off stocks across various sectors, seeking safer havens for their investments. The technology sector, particularly vulnerable to trade tensions with China, was among the hardest hit. Shares of major tech giants tumbled, dragging down the Nasdaq. This sell-off reflects concerns about potential disruptions to global supply chains and reduced demand for tech products. The market's reaction is a clear indication of the interconnectedness of the global economy. Trade tensions between the U.S. and China have ripple effects across various sectors and markets worldwide. Investor sentiment has turned decidedly bearish in light of the escalating trade tensions. Analysts are cautioning investors to brace for further volatility in the coming days and weeks. Uncertainty reigns supreme, and many are choosing to stay on the sidelines until there is more clarity on the trade front. The market is clearly pricing in a higher probability of a trade war, said one market analyst. Investors are selling first and asking questions later. This is a time for prudence, advised another analyst. Investors should avoid making any rash decisions and focus on preserving capital. The current market environment serves as a stark reminder of the importance of diversification and risk management. Investors should carefully assess their portfolios and make adjustments as needed to mitigate potential losses.